Hey guys, and welcome back to the channel. Yesterday you probably watched the first part of the capital and county stock analysis, and today I'm bringing you part 2, which is about the impact of the 2020 crisis. So we can start with this picture, and let's start on the left top, and then it says majority of retail and food and beverage customers have reopened. Obviously this was a half-year report. We haven't seen a quarterly third quarter report yet. And right now I believe most of these stores are closed again, and that is why the stock has significantly dropped. And even if some of them are still open, the fear right now with all the cases increasing and stuff like that, it is the fear that the stores are gonna close for a longer period again. So while this seemed like good news in the half-year report, it currently isn't, and that is why the stock is trading at such a big discount. Well, on the right you have a welcome open air environment. This is basically just talking about the Covent Garden, the way it looks. Like I encourage you guys to just Google Covent Garden and just see how it looks. I'm pretty sure you're gonna be impressed with how it looks. It's a really nice space, so I do believe that this real estate will eventually be rising again and stuff like that. So this part, the third, alternative rental arrangement agreed. We will get to this in a bit. I have an entire page on it. And encouraging early indicators. I believe that they have seen an increase in customers the moment they reopened, but obviously right now that's not the case, or the fear is that it is not the case anymore. So I'll take this with a grain of salt in this video. First, I'm going to talk to you about something positive regarding this crisis that they're in, and that is that they have made an investment in Shaftesbury plc shares. So they have acquired 26.3% of Shaftesbury's plc. This is a publicly listed company, so you can also look up this company and see at what prices it trades and so on. And if you look at this picture right here, you see in the green what CAPCO previously owned, and with this acquisition they own a stake in all these different assets. Sure, their CAPCO strategy on the left bottom here is invest in complementary opportunities on or near the Covent Garden estate. So if you look at this, you will see that these are probably the most likely reason why they invested in this company. This is a substantial stake, and yeah, I looked at this share price and it dropped this year about half. So I can see that they want to acquire these assets in this way. They acquired this with a slight discount on the price back then as well. Right now it is trading as well as a lower price than it was back then, but regardless, I believe for the long term this will be a good opportunity as well. So unique opportunity to acquire a significant stake, and obviously the unique opportunity to acquire a significant stake, like they cannot just buy 26.3% of the shares, they have to make a deal with the people there. And yeah, it was a unique opportunity, and I'm glad that they were able to do so. Attractive investment and entry price, an implied price of approximately £1,200 per square foot. Look, depending on the assets, like we would have to look at the assets to see how good they are, how valuable they are. But regardless, like the fact that they even dare to mention this is probably a good sign that they have acquired it as a discount at least. So all in all, this is very positive. Now on to the less positive part. Quarterly rent collection summary. So in this page we're just looking at how the quarterly rent collection has been going, and if you see the first quarter of 2020, we see that they have received 19 or 98% of the outstanding rent, and 2% is still outstanding, so they haven't been able to collect that. And then if we look at the second quarter and the third quarter, we see that they have made deals with them. So I listened to the quarterly earnings and I was very curious to hear, okay, what are these deals looking like? And they didn't talk about it, but an analyst did ask it, and that's when they answered the question. So they have basically made deals with these customers, and they have rent deferrals, and these rent deferrals are up to 12 months of no paying in rent, and afterwards you have to pay it back. So it's quite a significant rent deferral, a quite significant portion, and I believe that CAPCO is able to do that because they have a very strong balance sheet. Like I mentioned this before about the balance sheet, like they have, I believe right now it's something like 320 million pounds in cash, and if you just look at the quarterly rents that they are supposed to receive, that's 18 million pounds. So let's do this times 4. That's like 72 million pound. So they, even if they don't get any rent for the next 4 years, they are able to survive based on their current cash position, not taking into account the amount that they can still draw from their credit facilities. So all in all, that is very positive, and I believe that they can have a very good relationship with their customer because of that, because they don't have to push, they don't have to force that customer into bankruptcy because of everything that's going on. So this is very, very good. And sure, the times are challenging, as mentioned in every sheet, basically. And that means that the small tenants have entered into administration approximately 3 million pounds of passing rent. To me, this is pretty significant, but from a book value perspective and the fact that this company is undervalued, I'm less worried about this. I'm sure, like, it's very sad for this customer, of course, of these customers or tenants, but yeah, these kind of assets, I'm pretty sure they're going to be up and about at some point with a different kind of tenant. Something interesting in this page was the cash utilization. So at December 2019, they had almost 1 billion, well, let's just say 900 million pounds of cash and undrawn facilities. And what we see here is basically, okay, what has happened since then? So they have sold an asset of Earl's Court for 130 million pound, which has happened some time ago already. And this is probably the biggest thing. They have acquired this financing. It's 430 million pound. So this is what they have drawn from their credit facility, from this amount. And this is predominantly used to invest in those Shaftesbury shares. And that's this part. And what we've seen as well is share buybacks and dividends and operating cash flow and other. That's how the current cash flow of June 2020 has come together. And here you see the 320 million pound in cash, which means that they can pay 4 years of rent. They can actually, like I'm calling it rent, but it's basically revenue. So from a Black Swan event perspective, they could survive 4 years with their entire revenue without receiving any revenue. That's more my point. And besides that, they also have a 300 million pounds credit facility. I am not entirely sure if this is still available. Obviously, we are almost 4 months after this, after June. And what I have known is that Shaftesbury had to do a share equity. Shaftesbury had to do a share equity, so they had to increase their share count. They needed money, and I know that CAPCO put in 60 million pound extra, so that's going to be drawn from here or here, so it's going to be slightly, but you see here that there's a lot of wiggle room, and I wouldn't be surprised if something else is going to be acquired as well in these circumstances. So looking ahead, what can we expect? Well, they mentioned here the extraordinary first half of 2020. They expect this to remain challenging. Yes, I do believe that it has become more challenging than they were thinking 3 months ago or 2 months ago. But still, yeah, they were right. It's going to remain challenging. And that is why this opportunity is still there, of course. If there's no challenge, then yeah, why would you buy such a great asset or such a quality real estate in the central London at such a discount? So yeah, remain challenging, but the balance sheet looks good. So from a bankruptcy perspective, we have very little to worry about. Decisive actions position the estate to benefit from a recovery and prosper over time. So I believe that with this part they are mentioning their stake, increasing their stake or getting a stake in Shaftesbury PLC, and obviously the way that they are communicating with their tenants and customers to make sure that they stay afloat. providing our customers with confidence and setting to gradually build towards previously trading levels. So what I learned from their earnings calls is that they are in close contact with most of their customers to see in what way they can help. You can just look at CAPCO Investor Relations and you will see the news releases that they do, and they are just really trying to build up not just confidence for their tenants, but also for the customers of the tenants. So just the locals and stuff like that, and people that visit London. So they are really working together to create that confidence. So that is obviously very good. Seek efficiencies across the business and remain disciplined in capital allocation. Obviously it's very subjective, this part, but I like the fact that they just mentioned this, because I wouldn't want to be investing in a business that does not look at their capital allocation or the way they spend money. Like, costs are the biggest part of any business, and you need to make sure that you do that, that you allocate that very well, and you don't waste anything by buying something that's not worth it. And the last part is confident in the long-term prospects for the West End and our unique investments. So I agree with this, from the West End London, and if you look at Covent Garden and the location and stuff like that, yeah, long-term prospects, I don't see any reason to doubt this part. I'm sure they have a setback right now, but I believe that this company will recover, and that is why I have a stake in it. I have bought 3 times this company so far, so on different levels, and the last part that I bought was at 105 pence, which is currently trading below it, I believe. So this was part 2, the impact of the 2020 crisis. Tomorrow you can expect part 3, which contains my outlook and the thesis. And in my thesis I will also include how I categorize this company from my perspective. So if you like these kind of videos, please leave a like. And if you haven't subscribed already, please subscribe to my channel, and then you will notice when I've released this 3rd part of the video. Thanks again for watching, and see you guys tomorrow. As always, please keep in mind that I am not a financial advisor. The content on this channel and on my website is intended for educational and entertainment purposes only.